Hi everyone, how you doing? We have Jackson Hole, but it's only the backup bands today. The headliners are tomorrow. Hi Peter, Patrick, Kevin, Arun, Yasser, Ziggy, William. Everybody, we've got a great show for you today. David Arafat's going to be our special guest today. David has a stellar reputation in the trading community as being an innovator, analyst, trader, so it's going to be a great interview. Hope you stick around. I want to welcome all the viewers from investing.com. Welcome to FACE. FACE stands for ForexAnalytix Community Experience. So let's start off with what I talked about yesterday. Actually, the 3-drive held. We never got back down. I was talking yesterday to be long in this range here, and that we could go to 70 or 60 again. The low was 70. So this is the way I like to start a day. I don't know about you guys, but I like to start the day this way. So you have right here at 42, I'd say between 50 and 80 pips. So if you're following me, yeah, there's a black box on the screen, but at least it's in, maybe that's supposed to be me, my camera. Can you guys see me? Maybe that's the camera. Let me try it again. There's one more. Oh, let's see. Yeah, I see that. Unusual. Anyway, it doesn't cover up. Look to the right. That's all that matters anyway. Right? I mean, yeah, I don't care about this yet. When I'm looking for supply levels, yeah, I'll look left. I see supply levels right here at 260. We cracked 260. I think we're going to make a move towards 360, although up here at 63, a little over 63, I have a moving average. I just want to give you guys just a little bit of a look, longer term, just in case this turns out to be something special. So let's go to 4 hour. Okay, so we're right at the 76 level of this huge decline. Check out the decline. And I remember I was bearish up here. Okay, so now we're back at the 76. It's a nice day. We had divergence. Look at this. Then look at this. Then look at this. So, you know, a lot of good confluence up here. I think we're going to 3.5, 4, but it could turn into something else. What if this is 1 or A and we've had a 2 or a B back to a little beneath the 78.6 retrace level? Maybe we're going to have something like this from here. But I would expect at least some type of correction from here to here. Everyone with me? Give me a Y if you understand the analysis. Give me a Y if you took the trade. And more importantly than that, give me a Y if you booked 40 pips or more from the recommendation yesterday. Okay, a lot of Ys. I like that. Anyone underwater a little bit? On anything? You know, sometimes Skype distracts me. You are, Craig? Well, this is for you then, buddy. Oh, you're still gutting it out? Okay, yeah, I'll get to that. But all I have to say is, it ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. So don't be worried if you still believe the call. Never said I was perfect. That would be a lie. That would be a lie. But I'm better than most, and I can look you in the eye. Watch your face fly. It ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. But if you still have conviction, stay with it, stay with your call. I've got faith in Stelios and his long-term euro pound as well, Craig. You know what? I have confidence in Steve Vogie and Stelios and Gregor Horvat and Nicola Duke, and let's not forget Blake Morrow. And also sometimes, yeah, Jess, and sometimes that Forex Stop Hunter guy. So let's just take a quick look. Today may not be the big movement day. Tomorrow's Yellen and Draghi. I'm pretty sure about that. We have equities coming back. You know, still hanging around the flag that Steve showed. I think Steve's going to be with us. One thing I did notice, which makes me think that there still is a possibility of a rally to above 1830. We did have a confirmed high here on the 1 hour. But I drew some fibs, and 78.6 back would come in at 1857. I might take a shot up there. Thank you, Yasser. All right, everyone see this? So I'm looking at fib retracements from the high that we had so far to the recent low. Everyone with me on that? Comes in up here around 1857. So if we get up there, it may be worth a shot of managing risk over the high of the move. Give your stop a little tolerance. In front of Draghi and Yellen, trade small. Trade small, my friends, okay? You still believe in the trade, and the reaction to some central banker statements may give you a chance to build the position. So a toe in the water before you plunge into the pool. Do I have some agreement on that? And anyone else viewing us on investors.com, we all made a pledge yesterday that we weren't going to click our mouse unless we planned to trade in advance at least a day. So this would qualify for me because I was looking at this yesterday afternoon. So no position here yet, but I'm kind of planning on giving it a shot here that maybe it still could be a failing rally. Okay, so looking at that. Pound looks like it's, you know, we were talking about 7.5 to 770. Those are two nice candles, right? And look at the divergence. And after I'm through, I'm going to be bringing Nicola Duke in. I think Nick's going to be in the house. Anyway, from up here, early in the week, said we'll get one more low, and that would be the third. So, you know, this could have been the third. But look, within the three, on the third drive, you have a 3. So sometimes you get fractals like this, right? So it can't, right through the line. Nice 1 hour. Look at the glaring divergence at this low. So I think that there's a good shot. If you took that, you're also up pretty good. You're up about 50 pips. I know someone tried it yesterday. You didn't get hurt. You know, if you're going through a 30, 40 pip drawdown on a swing trade, and that's too much for you, you're either over leveraged or unqualified and unsuitable to trade. Because if you can't risk, be wrong for a day, how are you going to be right for a week? Everyone agree with me? Let your trades breathe, okay? Otherwise, you're going to end up being right the market, wrong the trade all the time. You're going to get picked off, and then you won't have the intestinal fortitude to recommit. I only know a few people that are good at that. They could get picked off on a trade and then recommit to the trade. I've seen Blake do that. I've seen Steve do that. I did it once. Anyway, so let's look at EG. I had that wedge line. I think we're back inside of it. So there was just one day of too much heat, but we did take out the old high of the move. And I'd say that EG, at least right now, is stronger. Pretty good RSI reading here. This doesn't show the 15 high. Here you go. Here's the weekly. Okay. Looks like we're starting to get some type of reversal candle here. In fact, you do have divergence because this reading at the high was here, up here, over 70. Right at it. Okay, so looking for topping formations for correction here, maybe today. What I'm going to quiz you guys. What gives me pause about shorting it right here? Can you think of anything that might give me pause? That I'd actually like to see one more high, unless we close back within the wedge line, right? And here's the wedge line. Right now it held it. So closing back underneath the wedge line would be the throw over would be negating itself. No. How about a confirmed RSI high up here? Here's the high in price. Here's the high in the RSI. I call that a confirmed high. Everyone see it with me? So investing.com viewers, besides analysis, I do a little mentoring in here. You know, our mission here in FACE is to build up and edify traders every day. So I teach some of my methods in here. So that's what gives me pause. So let's see, I believe that we have everyone here today. The team is here in full strength.
Everyone besides Blake, since I think he's returning tomorrow.
See? Out of sight, out of mind.
I'm here. I like your Euro Sterling trade.
Huh?
I'm here. I like your Euro Sterling trade. If you break that,
well, you know what, Nick, you saved us some heat last week while I'm on the chart.
If you break that 100 MA, you know, you can sell the rally back into it.
Yeah. Yeah, I mean, you called it here when I thought it was breaking down, and it gave me pause because you said it had to take out the 90-60 level. And boy, was that a good call. And then I saw on FXCM that retailers were pretty short. Not that I didn't try it up here again, but
and then there were those articles calling for parity as well. That's always a good sign of a
oh, okay. All right. So
yeah.
So
these always provide nice signals.
I'm going to go to Nick first before Steve.
Oh.
So I'm going to make Nick the presenter.
No, wait, I'm not quite ready. You keep chatting.
Oh, you're not? You're not ready?
I'm
okay.
just reading my charts.
I know who's, all right. I know who's always ready.
Yeah, he's ready, and I'll get ready.
All right, who's always ready?
Steve's always ready.
Besides me and Blake. And
Steve is always ready.
Steven used to be such a quiet, introverted guy before FACE. Now he's, he's way out there now.
You've created a monster.
I'm going to give it to him. Here you go, Steve. It's football season here. I know you guys think football, you only use your feet, but I'm going to throw you a button hook pass. That's where you come off the line of scrimmage, turn around quick, and I fire a bullet right at your solar plexus. So,
as you know very well, I have absolutely nothing against you Americans. I mean, I have a lot of friends. But honestly, having to do with naming American football, you did something wrong there. There's absolutely no question.
Yeah.
First of all, that's not a goal.
You probably think, it was that we're copying rugby or something, right?
Yeah.
All right, brother. So, Steve, I'm curious. Here we are with the backup bands today. A couple of Fed governors would be speaking, but the headliners, the main act is tomorrow with Yellen and Draghi. I believe.
Yeah, I think tomorrow is going to be the day that's going to have the fireworks, and I'm afraid because this let's be very honest, this has already been a boring week, and as you see, it's not by accident that the vast majority of the instruments have barely done anything because, you know, since we are low on event risk, everybody's waiting for Jackson Hole, and obviously everybody is focused mainly on Draghi because he's the one that's expected to deliver more than Yellen is, and of course, secondarily, Yellen, because you never know. I mean, she might give some kind of a hint about how the Fed is going to progress with the monetary policy. You know, there are a lot of people that think that the Fed should slow down hiking, perhaps even pause until we have some more information, because it's obvious that with Trump's agenda having gone to the back burner, at least temporarily, and the market having lost faith in his ability to push through tax reforms and other parts of his agenda that could have stimulated the U.S. economy more than it was expected before he got elected, and with inflation not playing ball, it's more than obvious that that there is not much underlying strength in the U.S. economy for the Fed to keep on tightening with a pace of like 2-3 hikes per year. Anyhow, it's well accepted that the normalization of rates is not going to be what we call the normalized rates like until 10 years ago, until the previous financial crisis. So, I think that tomorrow is going to be an interesting day, and obviously can create quite a lot of volatility. So
maybe we could start with cable, Steve, because we went right to your support zone, and we are putting in. If we close like this, it's not a bad daily candle.
No, it's not. It's not. As you see, this is a very interesting reaction because we already have an outside white candle today. So we actually broke to new lows. We barely held the bottom of the support zone that we had there, and we're currently pushing higher. So obviously a close somewhere here or even above is definitely going to be a reversal candle, given the fact that we're also on the zone we are on. So cable is a very interesting pair to watch from what we're seeing today. And if we actually produce a low here, a push at least towards 130, is quite likely, and that's 150 pips higher. Right. So definitely today's close is going to be one of importance. But it's a good idea.
Can I butt in? This is a really important level. If you zoom out on your daily.
You know what, Steve? Nick, I just rushed her a little bit. It took her like 2 more minutes to get ready. Maybe we should just have,
I'll quickly show you my pound chart and why, if you like.
All right, I'm going to pass it over to Nick because I think she has some.
And then we'll go back. Steve, I feel bad I've interrupted you, man. I'll give it straight back to you afterwards. Sorry.
There's nothing to feel bad about, Nick. That's why we're here and interact. Go ahead and show what you want to show. But I totally agree with you, Nick. Since we failed the ascending wedge, I had said that I'm expecting a move lower, and I believe that 130 is not going to hold. But I don't know what's going to happen with 128. So, here we are, and let's see what's going to happen from here. I don't know if you have some harmonics view that gives you more confidence of a bigger rebound here.
Since you do harmonics, Nick, you should sing with me. In harmony.
Okay, so here's my daily chart of the pound dollar.
Nick, we're seeing, by the way, a screen that has Wirecast on it. I'm just telling you.
Oh, you've got my Wirecast? Okay, you've got the wrong monitor.
Yes.
Hold on.
Yes, I did so. That's why I told you.
Yeah, Nick is also a television producer, besides a legendary creator. All right, Nick, got you.
Have you got my chart now?
Yes.
Yes.
Okay, good. Okay, so this is the daily chart of the pound. You know, on this chart I'm showing you, it shows the low in October down here at 119, but everybody agreed that the crash low was actually 118.60. So,
No.
but not everyone has got that. If we are ignoring whatever this low is, if this was just a wave one, if I put my fib retrace from this low here, in January, so we're just doing the January low to highs, we're at the 38.2 retrace of the January low to highs here at 127.79, and it's also exactly this high, if this is a wave one, I don't know, like, so for me this is a really important pivot level here if the pound is going to continue higher. So
nice.
this high here and this 38.2 from this low make this level really interesting to me, and I bought pounds today. I really do actually prefer the euro sterling setup, but I think this is really interesting too. So
Okay, so you think that was it in euro pound yesterday, Nick? And I mean, those were some of your those were some of your long-term targets from about, I don't know, May.
Yeah. Okay. So here's the daily euro pound, and I'll clean up this chart of indicators a bit and show you. So if I this was a back pattern. I've got a lot of fibs drawn on this, and I'm just going to hide them. Sorry. So this 886 level, the euro pound really likes the 886 level. So the 886 level is 91.60, and this is where the 91.86 was where the 1.618 of this ABC correction came to. So for me, I was looking for a reversal in this zone. So if we can drop back into this box and go below that, I'd be interested. And if you go to the hourly like you were looking at, and I'll take these other, I look at the other moving averages to you, but we're even down to a 15-minute. This is the like 200 moving average, which is the hourly 50. I think and that's been support, you know, all the way.
Yeah.
I think if we can get below that and retest it and go into this zone, then I'm definitely a seller. I tentatively sold a little bit, but not like a whole position. I really need this to go to confirm it.
Do you have anything above it, like 92.70, 92.80, that we could still achieve? I'm just curious.
Not.
Would that invalidate the pattern if we went?
No, I mean, new high invalidates it really, and even then, you know, we could go to a 113, and because you know long bull runs very often end on a butterfly pattern, so that would be a marginal new high and a 113. So my level then would be here at 93.95 still.
Oh, okay. All right.
So, but no, between here and the previous highs,
yeah.
No, I don't have another level in there.
Okay.
But, you know, this has been a proper squeeze, I think, and Draghi doesn't speak, you know, till tomorrow night. Like he's coming, I think it's 6 p.m. London time, so 1 p.m. in New York. That's what time Draghi's speech is. But we could get he could make any kind of comment if he doesn't like how strong the euro is and completely sink this. So I think that what we're seeing is a lot of de-risking ahead of Draghi saying anything, maybe.
Yes, so although the question, Nick, and you know, what I doubt is the following. Do you think that Draghi commenting on the level of the euro and him not liking it or whatever else should provide enough of a reason to the market to actually do something? I mean, do you think that just jawboning can actually change the market's opinion about the euro and actually lead to a sell-off? Because personally, I'm very much unconvinced about it. I believe that the market needs not to hear Draghi just jawbone the euro, but actually to provide some tangible evidence that the ECB is actually willing to do something about a strong euro. And personally, I'm very skeptical that he's going to do that, especially knowing that the main force behind the ECB's monetary policy has been and is the Bundesbank, since it represents Germany, and as we all very well, as we all know, you know, Germany has always been extremely cautious with expansive monetary policy, etc., etc., etc. So I don't know. I'm very skeptical. I'm very skeptical.
I don't think right now the markets have anything else to focus on, and I always think they overanalyze anything that's said at Jackson Hole. And you know, Yellen will be first. Yellen is going to be about this time, you know, tomorrow. So yeah, no, I think it's very risky.
Yeah.
I think
how about Yellen says something that is a little more hawkish than normal, and Draghi says something that, you know, economic conditions are not out of the woods yet.
I think the reason that we are guessing is why people are de-risking in the euro, because we are guessing, aren't we? So, I mean, I'm bullish, longer picture, bigger picture. I am bullish, but I can't rule out, like, this is the euro dollar 4 hour. I can't rule out that this correction, this two-wave correction we've already had, isn't just the first wave in a bigger two-wave correction, but
yeah.
And so, you know,
or as an Elliotician would say, for example, a double zigzag, it might prove to be,
exactly,
or something like that. Yeah.
So you don't know.
I think the market is pretty long euros, Steve. And, you know, when I think about, you know, how there's never been the big pullback for anyone to get in, you know, everyone was looking for 50% retracements. You didn't have any of those all the way up. You know, you had mainly corrections were sideways, more like marking time instead of price to work off overbought conditions. So I think the market's pretty long, so I don't think it would take much to, you know, generate some selling pressure. I'm sure there's stops under, I think the grand prize stop would be under 1650, but 1750, I'd say there's a few stops, and then 1650 right at the trend line and under that low. And, you know, there's stops above. There's, you know, the bears have stops probably above Nick's C and definitely above A. So
by the way,
probably clean everyone out.
Since we want to be, since we want to be a little bit educational, this is a nice thing to just rewind a little bit and look into the past and to answer why we had no pullbacks, no serious pullbacks, and why we didn't give people the opportunity to get in. It's one of these occasions that trading with macro, which doesn't happen often, I have to admit, it doesn't happen not often at all. Trading with the macro gives you sometimes an opportunity to catch a trend that is about to start unraveling, that the market is completely ignoring for XY reasons for some time. If you remember, we were here together 2-3 months ago, after like it was 2 or 3 meetings ago in the ECB. If you remember, I talked about the euro being an excellent buying opportunity because it's more than obvious that the ECB is getting closer to tightening, and the market is still viewing the euro as a currency that should be sold. And the market was still like stuck in the sell the rally mode, and suddenly they woke up to the reality that, first of all, the European situation is not as bad as the market was pricing in since 2011, because obviously there has been a lot of progress since then from a political standpoint. We also had a very risk because we had the French elections, which went okay, the Austrian elections, the situation in Italy stabilized, and all of those things happened within a few months from each other. And suddenly the market woke up to the, to the reality that, the ECB had no reason to loosening any more monetary policy, and it's actually about to do the opposite. And that's why we had no pullbacks, because the market had to catch up with the macroeconomic reality.
So Nick, the other day when we were at 115 and you showed Euro Swiss, you said, I want to be long at 1250. You went right there.
Yeah, like I'm looking for like an ABC. I think that for me, the clearest indicator that the euro is going up again is when euro Swiss bottoms. And so when this correction is over for me in the euro Swiss, it's like the euro pound. That's the one I'm going to be watching. So, you know, if we do an ABC from this first swing, then we come back to exactly that prior high that we talked about on the daily. I'm going to go to my daily chart. And this will come back exactly to this high from 2016 January. So an ABC correction lines us up exactly there at 112, nice. And the alternative is 112.50. So that one of those two levels, I think, will be the bottom in Euro Swiss, and that's what I'm going to be watching for. So
nice.
Yeah,
that's also a nice pennant formation, right, Nick?
Yeah, really nice pennant formation. So yeah, this is what I'm watching in Euro Swiss. So
I would call it more of a descending triangle, which is actually
like we've got two touches on the bottom.
Yeah. So you got a flat bottom, descending top. You know, Edwards and McGee says that's a reversal formation, but who knows? Right? You know, they call these, you know, ascending triangles are, you know, that, you know, just something from an old tape reading guy.
Yeah, that's true.
Mr. 3. Or basic technical, as Blake Morrow would say, that would be BT, basic technical.
Yeah, so that's what I'm looking at. I'm looking for this one to tell me when the euro's bottom. But for now, I think I just see people getting out of euros ahead of tomorrow.
So Nick, what else are you monitoring at the moment? I mean, I know that the market has been extremely quiet and slow during the past few days, but is there some kind of a setup you're monitoring besides those, and you're waiting for it to?
I think copper's a bit overdone, and I've been looking for a correction in copper, and that's probably, you know, but we've gone through my levels, just like the euro sterling. They've gone through the levels that I was expecting a bit, but I'm looking for maybe a pullback in copper. It was these lows here that we're up against, and this big 38.2 retrace. It's been in a big bullish pattern. I need to tidy up this chart because I'm not showing you very much. And so I think if no sign of a reversal yet, but if copper does reverse, sorry, I'm getting rid of this. If copper does reverse, then I think that it'll be, you know, weighed down on the other metals. And I've been quite bullish silver and gold. So I'm watching what happens here in copper at these prior highs, but absolutely no sign of a reversal yet. I think oil has been very tricky and stuck in a range, so I don't have anything there. The only other thing I really see potential for a good bounce in these yen crosses. I've got a pip on the dollar yen at the moment. I just think that we can see another bounce higher here, back to this, back to 109.96, and only if we get above sort of 109.96 will we bottom. Otherwise, I think that we'll just continue lower with the trend. So that's what I'm watching. It's just a short-term trend, unless we can get above 109.96 in dollar yen. So that's the level I'm watching for a reversal. And
thank you, Nick. Before you go, I'm hoping
if it gets up there, then it'll go to 111.50 if we break down.
I'm sorry. Yeah.
Sorry.
That's okay. No, it's, you know, I'm the interrupter today. Before you go, I was hoping that you would get crypto on us.
Crypto. I haven't got my crypto.
Go crypto, Nick.
You know, in the crypto world, in the crypto world, you know, the uptrend has started again for Bitcoin, and this we've had a bit of a pause, but the SegWit stuff is going through, and it's really speeding it up, and it's really good news for Bitcoin. So if people are thinking about investing, this is a really good time to think about it.
It's hard to believe it's a good time when it's this expensive.
Hey, when it's up all this much in the year, I know, but you know, when it's hot, it's hot. Buy high, sell higher.
Yeah, I know. That's the opposite of what most people are taught.
It is, you know, and if you don't like it, obviously you should stay out. But no, I'm just saying that there are some things happening in the crypto space that are really speeding up the things that have held Bitcoin back. So it is quite interesting.
You have some charts to demonstrate it?
No, I don't. But I'll load them up for you. Sorry.
Okay, thank you.
No problem. So
I saw a comment on Twitter how slow things have been for Ethereum.
yeah, Ethereum's really lagging, you know, but there's been some new stuff going on that's been really hot, and a lot of money has been going into Bitcoin and a lot of the new coins. But to be honest, Ethereum is on the up, and if you look at Ethereum against Bitcoin, then Ethereum against Bitcoin is starting to outperform again. So for me, I've put some money into Ethereum back again. I had it out. I was expecting a bigger correction, but for me, you know, I look at this as I'm just looking for the next swing higher. I'm not sure how much more we're going to go, given, you know, how much we've done this year already. But I'm certainly, if we make a new high here, then I've got two
almost
targets,
5,000.
48.40, and then a little bit higher here at 67.
You know, Nick, what troubles me with cryptocurrencies. We haven't built any basis yet to make some fundamental assessment of what is considered expensive, what is considered to be cheap. I mean, if you think about it, there are still so many questions on a fundamental basis about cryptocurrencies. For example, from a legal standpoint, will they be allowed to continue being? If they are, how many of them can survive, and how many of them can the market actually, you know, keep respecting? And then you have other questions like how legit are, you know, the venues they're trading on, and how liquid can they become, and how can they follow, you know, the regular monetary system, etc., etc., etc. So with so many questions on a fundamental basis, how do you establish what is obscenely like expensive, or what is cheap, or you know, what is a good buy or whatever? I mean, besides knowing how much
charts.
Yeah, technical analysis. I'm not going to tire myself out worrying about that. I'm just going to use technical analysis and trade it. I can't see any reason why it will go. I don't believe that the government, I think it's really important that they do regulate the exchanges. Most of them operate like the worst kind of bucket shops. They're all trading against their clients. They're spoofing on the exchanges like you've never seen. And the difference for most retail FX listening, you know, you see the order book on the exchanges, and there's horrendous spoofing. And, you know, you'll see crypto traders talk about sell walls and buy walls, and they're not walls at all. They're just massive orders that disappear as soon as you get there. So
wow. Yeah.
there are some really naughty stuff that goes on. But, you know, Coinbase, the biggest US broker, which doesn't do a lot of the small coins, is opening 3,000 new accounts a day. Now, even if they're small accounts and they're just, you know, $500 or something, that's a lot of money coming in, a lot of money. So it's not over.
Yeah, but what kind of money is that? Because judging from the intercom tickets, the stuff that's working here has been showing us, the vast majority of the questions about cryptocurrencies is of the following quality, let's call it. Hi, do you think that it's a good investment to put all my money in Bitcoin? Hi, do you think Bitcoin is going to $10,000? I'm not kidding about it. I'm talking about
think it is.
Massive amounts of questions about that. And usually, to me, you know, being an economist as well, when I see this kind of things and the amount of new accounts that open, first of all, let me go back to the technical analysis. I agree with you. I'm doing the basic technical analysis on it, and I obviously see that it remains bullish and it's going to new highs. But despite that, if you ask me, where is it going to be in 6 months from now, which I cannot predict since now from technical analysis because we need to see more price action, etc. I can tell you that I wouldn't be putting my money there, honestly speaking. I wouldn't, because simply to me, there is a lot of destructive elements in cryptocurrencies at the moment, which can very easily lead to massive sell-offs and loss of value.
In the meantime, I would follow Nick's technical levels because I want to remind the community And you, Steve, we talked about, Nick talked about 6 or 8 weeks before, using the big round number of 1,000 on Amazon, that we would go to 1050. And
yeah,
1050 was the high close. It traded, as you showed, Steve, traded above it intraday the next day, but never closed above 1050.
Mm-hmm.
That was a, you know, you nailed it, Nick. You nailed it.
$1,000 in Amazon. Yeah, that was funny.
Nice one.
Thank you. Okay, well, I'll get Steve get on. Thank you for having me.
Oh, Nick, can you just answer one more? Just
yeah,
one more.
Of course.
Luca wants to know what you think of the bunds or the bonds. You know, a lot of people are a little confused with
I've seen a lot of people talking bearishly about bullishly about the bonds, and I've seen some quite bullish DeMark stuff counts on the bonds. For me, I'm a little bit bearish here, and it's got to get a little bit higher for me to get bullish, and I'll show you why. Hi, Nee, thank you for that question.
Yeah,
so
Luca's he's become a bond vigilante.
Has he?
Yeah. Okay.
So
yeah.
This is a bit of the channel that we're in for me in the bins, and every move in this bin, I'm looking at this isn't a futures chart, this is the front month continuous, and every move has been an ABC, like equal measured root move in this bin.
Yeah.
So each one of these rallies has been, and this rally was as well. So this was corrective, this was corrective. I'm not saying that like it's not, but this here, if we take from this low to this high, what we've done here is 61.8 of this first swing, and we've still got this trend line. I had it a little bit lower, and I thought, oh, we've broken out, and there was a horrible sharp sell-off after this false breakout. If I move my trend line here a bit, here we are again, and we're right on it. So this is why I'm thinking maybe we could see a sell-off here, and I'm waiting to see what happens. Plus, in the bigger picture, I've been looking for a big, at least before we bottom, what I've been looking for, big picture in the bins, is a big ABC down, which takes us down to about here. So if that's why I'm a little bit bearish the bin. And if I look at the US 10-year, I'm going to clean up my chart again because you don't need to.
Obviously, though, Nick, a move above 165.50 completely invalidates that view, correct?
Yes, exactly, and we're going much higher. Exactly. So we're right here.
Yeah, this looks more bearish, Nick.
So this is, and you know, the spread between the US 10-year and the bin is the widest it's ever been, ever. So all ears will be listening to Draghi tomorrow and seeing what he's going to do. So this, for me, you know, was the US 10-year, a weekly chart. This was a big weekly bear flag, and we're in the second leg lower. And we need to, you know, if we make an equal measured move, we're going to come down to 120.30 in the US 10-year. So I was looking for a 38.2 retrace of this leg, which would retest this trend line, the level, and that's what we got exactly. That was the high in June, and now here we are in August retesting it on the weekly. Okay, remember this is a weekly chart. So this is why I'm looking at this zone for a reversal. I don't need that on. Okay, so if we go to so obviously if we close on the weekly above 126.30, then this resistance is negated, and we'll look higher, perhaps to the 50% of this swing at 128.11 next. That's how I'm looking at this. And then here we are. So this is the level I'm watching and why. And this is the price action. And for me, you know, there's nothing to say we're going to fire through right yet, you know. We're stalled here. This is an 886 of this swing lower. This is a harmonic pattern here. So I'm waiting to, all I need to see is the reversal. And for me, you know, if we take out yesterday's low and we make a lower low, we've got a higher low. If we make a lower low, we've done it. So that's what I'm watching.
Thank you, Nick.
And that can also happen tomorrow, Nick. I mean,
yeah,
with
exactly. I think it can be really quite volatile. So that's why.
It did.
Thanks so much for coming by, Diamond.
Very welcome.
Appreciate it. And Steve, you have about 15 minutes if you want to continue. There are some questions. Everyone thank Nicola Duke for, I tweeted that I've interviewed.
Guys. Thanks.
I've interviewed, Nick, did you see my tweet? I've interviewed hundreds and I facilitated hundreds of traders. And as far as TA.
You embarrass me now. Stop.
You're the best to listen to. All right. So,
that's just my voice.
No, not just that. I'm talking about your work. So, all right, let me give it back to Steve.
Thank you.
Thank you. Everyone thank Nick. Nicola Duke, once again, some very nice ideas. So, we're preparing you for tomorrow. Of course, you might have some trades going now, but you're being prepared for tomorrow. There's Steve's stuff is back up now.
Okay, Dale or Stelios, you want to help me with questions so we can go over them? Because I remind you, I'm still in a hotel on my Mac, so I don't have multiple screens here.
Sure. Let's start. Well, okay, we're getting questions on stuff we covered yesterday, but it doesn't matter. We can cover it again, right? Michael.
Why don't you start from the stuff that we didn't cover yesterday, though? Because people can always find the recording. I mean, we'll try to cover those as well if we have the time, but let's see if we can go through some of the stuff we didn't see yesterday.
There aren't that many questions, actually. Hold on. Just checking. The first one I saw is Michael asking for Aussie Kiwi, but we had a look at that yesterday.
Okay, yeah.
Because he's saying it's and Palladium. Okay, we'll have a look at Palladium next.
Sure. Okay. Aussie Kiwi, obviously it's consolidating, its recent gains because, for its standards, it moved like more than 100 pips within like 2 days. The next level to watch, which is the confluence of this high that we had on March and this descending triangle trend line, which if I zoom out, you can clearly see it. I mean, it's of great importance, comes at 110. So, 110 is a critical level. If we break above 110, we're headed to 113. So, a break above 110 should bring another 300 pips of a rally at least. On the other hand, obviously, even if we see a retracement lower, as long as, let's say, roughly 1085 is holding, you have no reason to be bearish at the moment. I remind you that this uptrend move started with this inverted head and shoulders move, which we had indicated, held by the 200 EMA, and this is higher. So even if we see a corrective move lower before getting to 110, as long as it holds, this descending trend line and 108, 108.50 somewhere there, you can remain bullish looking for 110. And the break above 110, we're going even higher. So absolutely no reason to be bearish at the moment. I also gave the levels of importance. So let's see what happens from there. But it looks good. It definitely looks good at the moment. What else, Sergio?
Okay, Arif is asking for Palladium.
Yeah, sure. Let's have a look at it. There we are. Okay, Palladium is consolidating here, but for the time being, it did exactly what we expected. I mean, when I say exactly, I mean exactly. So the question is, what happens from here? Listen, for the time being, this looks just like a bullish consolidation. So unless I see some bigger reversal, I'm inclined to look for one more high, and then I would be looking for a good reaction to go short, looking for 825. So Arif, I'm still being patient and monitoring. I don't see a signal yet. What else, Sergio? By the way, silver, and since we're here, silver and gold are still chopping around around, near critical levels. I mean, especially silver, if you have a look at it. I mean, it's amazing. It has been producing spinning tops, dojis. Yesterday we had one bullish day, and immediately we get one bearish day. I mean, silver is seriously stuck between 1720 and 1670. I mean, I think the metals are obviously waiting for Jackson Hole as well, simply because the market is currently that we don't have any big risk of. The market is treating the metals as the opposite side of the coin of rates, simply because the rates are considered to be the opportunity cost of holding metals. So since we expect that tomorrow's Jackson Hole might obviously move the bonds, at least the benchmark bonds, and hence rates, I think that the metals are also waiting to see what's going to happen with that. So if we actually see tomorrow a move higher in the bonds, which means that rates are going to move lower, I'm absolutely a believer that gold is going to slice through the 1300 resistance like it's butter, and silver is going to push through towards 1775. But on the other hand, if we see gold, hence rates moving higher, then you should expect the bonds, the metals to actually reverse lower from here. So, we are ahead of binary, a binary event for many instruments, and tomorrow is going to be the tell. But the good thing about days like tomorrow is that we might get some big candles, and many of them might be reversal candles, and that's not a bad thing. That's a good thing. I mean, it's okay if you lose the first part of the move instead of trying to, ahead of an event risk, guessing 50-50 what's going to happen, because simply some big reversals can indicate an upcoming move that will have a lot more to go. So it's nice waiting for confirmation and then knowing how you're going to position yourself starting on Monday. It's absolutely okay with that, and I'm pretty sure actually that Monday's webinar is going to be an interesting webinar, because I'm predicting that we're going to have a lot to talk about finally. Go ahead, Celio.
Okay, related, we're being asked by Offense for platinum. Have you looked at platinum at all? Not recently, I don't think.
Oh, platinum. Let me remember. Yeah, I have. I haven't had a look at it for some time. I think this is the ticker I had been looking when I did so. No, perhaps not through Wanda though. I need to find in which ticker I had done technical analysis on platinum. Suffice it to say that I do remember what I was looking at, and what I was looking at is, I'm going to show you now. I've done technical analysis, but obviously not on this one. Was this, and this was, in my opinion, this was a very interesting break, and it was a bullish one. This one. Okay, the break above this triangle, and also this move looks impulsive to me as well. This one, and it looks like it has more to run. So platinum looks. I can tell you one thing: platinum looks good as long as we are above 950. So if you like platinum, also Dale, as he likes to say, Dale would tell you that this was a confirmed high here, because we had a high RSI reading somewhere at the vicinity of 75.
Yeah. Doesn't mean it can't pull back, but that should not remain the high. Are you there, Steve? I think I lost Steve's audio.
Yeah, I think we've lost him.
Okay, well, his chart is up there. So what Steve is saying is, if you look at the RSI reading at the high over 990, it was a confirmed high. We got a pullback, and now a recent rally back to the high. Steve, are you scuba diving? Steve's doing his sea hunt imitation. You guys are too young. He's doing his Lloyd Bridges imitation sea hunt. So anyway, Steve, when you get the snorkel out of your mouth,
I think we should.
This break higher.
Here we go.
No.
Then we lost him again.
Yeah, it's okay.
Anyway, we're only 5 minutes away from the interview. I'm looking to see if David's in the house yet.
Okay.
Updating conversations. I'll come back from vacation already, Steve. I've had enough of you guys taking vacations all summer. You guys all leave me to slave away, to serve the community. If I see one more picture of a Greek island, I'm going to hang myself in the office here. All right, everyone.
All right,
okay, I'm here. I don't know if you can hear me, guys.
Yes,
now we can hear you. Yes.
Okay, now.
Okay,
yeah,
that was very weird, actually. I haven't moved at all. I don't know what happened, and I'm through my wireless router, and it says that the signal is absolutely fine. So I have no idea what.
It sounded like you were snorkeling, looking for some scrap palladium on the bottom of the Aegean Sea.
Oh, I wish I did, actually. I wish I did, and I don't know if you can still see my screen, but you know, to take you a little bit to vacation mode, I can definitely show you something you're gonna.
No, I have Hangman's news out. Don't do that.
Can you see my screen?
Yeah, I see it.
Do you see the sunset?
Yes. I see the sun setting on your vacation. And hey, Steve, I see the sun setting on your vacation real soon, and you coming back and working like a dog.
Yeah, that's unfortunately very true. It's until Sunday, but this is a very nice time lapse. This is a very nice time lapse of sun setting. Anyhow, do we have any other questions before the interview, guys?
We had a question on Aussie. Sterling Aussie. That's the next one we had in the list. Maro is asking for that. He's saying he thinks it might be doing a bullish wedge in the 4 hour.
Yeah, looks good. Tell him Forex Stop Hunter covered it.
Okay. First of all, to begin with, until we clear 163 to the upside, there is absolutely no reason to believe that it's not going lower. Okay. Now, having to do with the 4 hour chart, let's have a look at it on a 4 hour chart.
And David, I see you in the house after this analysis. You'll be going live with us. Go ahead, buddy.
Okay, let's see what he says in a 4 hour chart. So I'm guessing that, let's see, let me get the magnet out of here.
Anchored off, and anchored off that 65.5 high up there too, to where it could fill out to. I'd go to that next high, but you like to ignore those spikes. Okay.
So he's saying.
Anyway, people should already have a 45.
So he's seeing something like that. Yeah, which more or less tells us the same thing, that even on it. Yeah, so it still shows us more or less. So even if you want to say it like this, we can point. You still need to see like this area. So you still need to see this area here, break higher. And then, yeah, you can look at it that way. And definitely, we have already, but you know something, somebody can also tell you that, you can draw this trend line from elsewhere. And if you do so, this is also a wedge. But it has more upside to clear. Okay, so in this case, you would be looking like this area, for example. Okay, so yeah, definitely. But if you look at it on a daily chart, this has been a very nice move lower, channeled, well behaved. I do believe that we're going to get a rebound. We actually drew that when we were up there, and of course, it doesn't mean that it has to reach down all the way to the channel bottom. So yeah, I'm with you. I'm expecting a rebound, and I'm expecting, a rebound that, might take us back to at least 165.60. That's the level I'm watching. But I think we need a little bit more evidence to actually call this a reversal. So,
okay. Well, like I said, Steve, anyone who bought it when I was showing it yesterday at the 62 level, buying down to 160, has a lead. So the smart thing to do, since we don't have confirmation yet, is to book half of your position and now trail your stops to BE, and let's see what happens. So thanks, Steve.
Yep.
All right.
And you know something, if they get confirmation, then they can add back,
Yeah, the other half.
Yeah.
Great. Yeah.
So, thank you. Enjoy the interview, Dale.
That's a pearl. So stick around for David Rsi. I probably botched his last name, but David, I'm making you the presenter now. Looking forward to hearing your voice and seeing your screen, buddy.
Okay. Hi, Dale. Can you hear me?
Hi, David. Great to meet you.
Great to meet you as well. Good morning.
Thank you so much for being with us, David. I'm so glad I reached out to you on Twitter. I've been to your landing page on Twitter. You have a pretty good reputation, actually. A lot of people follow you, respect you. You're kind of like an innovator in trading, and your Twitter handle is @TradeIdeas. There's a hyphen or something for your website. But, David, I like to start with how you got here. And, everyone has a beginning. Everyone starts off somewhere. And I'm always interested in how guys like you who have become successful traders, what it was like for you in the beginning. Did you have a mentor? Was there a book? Who do you blame for having gotten you involved in the industry, buddy?
Okay. I'm lying down on the couch. I've got a morning Bloody Mary. And
I've been called a commodity shrink, so feel free to be an open book. So go ahead. Go ahead, man.
I'm going to cry, Dale. Yeah, founder stories are pretty, are pretty rich and amazing, and there's a lot to mine from them, and mine is no different. But it starts with the University of Texas, really, where I met my two other partners. First of all, you can still hear me, right? Is everyone?
Yeah, I can hear you and see your screen.
Okay, great. What we're seeing right now is trade ideas, and we're looking at the pre-market as it kind of develops, and we're looking at a surfing mode where it's going through and finding interesting setups. So on that backdrop, I used to think that the definition of going to university was in order to get an education, learn some things, and then apply it out in the world. But my partner, as I said, I met both of my eventual partners of trade ideas at the University of Texas, and one of them was my fraternity brother, and he was like, I didn't go to college to learn stuff from books. I came to college to start a network and to find you. And I was like, oh, that stuck with me for sure. And we had a great college experience, and then we kind of went about our own paths. And mine was to, I worked in brand and marketing for General Foods before it was acquired by Kraft, and then Philip Morris, and now what it is today, owned by Heinz and so forth. But that's where I got my initial chops on marketing and strategy and branding. And my other partner, Dan Merkin, went on to, right after college, get involved in the market sooner than I did. And so he brings about 8 years of market experience to trade ideas before we started. And so he started off as kind of a consultant for all prop trading firms like Block Trade back in the 90s that were doing basic access, SOS bandits, basic access to the
SOS, I remember. Yeah.
Okay. So that's where he kind of cut his teeth, and we always talked and we always kept in touch with each other. And he eventually started a company that was a forerunner to trade ideas that was called Future Trade. And it was a direct market access platform that competed with the likes of Ready Plus and a couple of others. And on several occasions, he kind of, we talked and said, you need to join the company. This would be a great opportunity. And he raised a mezzanine round of funds from Menlo Ventures, a VC firm out in California, where he had moved from Texas. And for me, it just wasn't the right timing. They never really got out of a vaporware state and into something that was in full production. So I was at the time as a consultant, and eventually, I got an MBA that was paid for by Kraft Foods, and I thought, okay, I've gone back to university to learn some things, and Dan's MBA equivalent was going through the process of raising that mezzanine round of funds for Future Trade, and then kind of losing control of the company when the board decided that they needed a more seasoned executive to kind of come and take over. So he eventually got pushed out.
Yeah. Huh.
So that was kind of a traumatic experience, but it shaped what was to come. And so, what was to come was working with my other partner, Philip Smolin, who's our chief technology officer. We created Trade Ideas, which was a smaller ambition of just creating a scanning tool of the market to help traders. And it was not regulated. It didn't work. We didn't need to do the regulation of back office and
right.
Processing and clearing and the like. So it was a trader's tool that was built from scratch, and it was a scanning tool in the beginning. And on that basis, it met my criteria that this is an actual product. We could start selling subscriptions to it tomorrow. And so I left the consulting firm and joined and started to grow the company. That was in 2003. And so for the entrepreneurs out there, we had the product kind of modeled or beta in 2002. We started collecting revenues in January of 2003. And
that's great staying power too.
Well, it says a lot to the technology and to a lot of the decisions that we made early on. One of them, the key one, was our cap table is pretty basic. There was only three equity partners in the firm, and then our employees and the rest. We decided early on that we were not going to take outside capital and suddenly turn what was a kind of passion project into work driven by responsibilities and reporting and using other people's money to grow the company. We decided that we were going to this was either going to succeed or fail on its own.
An observation I have, it's also a statement about your relationship with your partners, because partnerships like options, a lot of them come and go, and you're talking about 14 years of you guys riding the roller coaster together. That's a big advantage when you have a team. I'm a big believer in a team, because 1 + 1 + 1 could equal 111 instead of 3. So so you're blessed to have found guys that you enjoy, your friends, and business to not pollute the relationship, and you guys are all still together. Congratulations.
Thank you. It's definitely a blessing, and I think you're right to kind of point that out. I mean, it's definitely seeped into the culture of the company, and that's we do business only with the people that that we have relationships with and that we've established trust and that we like. That's permeated all the way down to the employees and the team that we've built. The last 3, 4, 5 hires I can think of have all come from previous relationships. that we've established. And thankfully, that's getting easier the more time you've spent, in this space and building the company. But we've had one perfect example is early on, maybe about four years ago now, we have a support forum, as part of our support that's available 24/7. People put in a question on a board, and we go answer it. And about 4 or 5 years ago, we had a person on the support forum that loved the tool, subscribed, and was answering questions better than we could and faster than we could on our own support forums. And this gentleman's name is Barry Einerson, and he eventually kind of created his own position, saying, look, I love the tool so much, I love talking about it. We ought to have a trader's room, a kind of chat room where we can be there all day and kind of use the tool and look at the markets. And we thought, well, that's a genius idea, and you're hired with that position and mandate in mind. And so this was only after he had spent literally 2 or 3 years answering questions and becoming a resource that he eventually became the moderator for this room. And he suffers no fools, and the room is meant to be focused on the markets. And it's not like over 600 people that are in there daily to just talk about the markets. And that's part again of the culture of how you bring on people that have we have not had a hire where we've had to like interview per se. We've known all the people who have joined the team well before they've joined the team, and that's not a bad way to kind of grow. I don't know how, the day that we start to really scale and need to massively build out, that may change, but it's certainly what's helped in getting us here.
Okay. So, it's amazing that you didn't think of the trading room before he brought it to you, but, it's, I really believe in them because that supports the people that subscribe to your product. And I'm a big believer in social trading because we only have 2 eyes, even with the tool. Your tools, I bet there's times that you'll miss something on a scan that someone else may see and bring it to your attention, right?
Oh yeah, I mean, I would, and the nice thing about it is that the company's grown and we're able to kind of, I took a vacation in June and I was gone practically the whole month. And so the first thing I did when I came back was to immediately plug back in, was to, sit in the trader's room and listen to everyone starting to use, using the tool, and getting into the conversation again. And it's a great feeling.
So I'm assuming it's that you guys coded this and it's proprietary, but what can you tell us about your model and what you teach and what people learn, and perhaps what performance has been? I don't know if you guys track your performance, even if it's hypothetical or it's real time. Tell us about the product now, David, okay?
You bet. So the arc of the way the product evolved, as I said, from a simple scanning tool, it's important to kind of quickly go through the history of how we built and innovated on top of all this. So we started with a scanning tool, and we were able to quickly build the company and start getting revenues on, thanks to key partnerships we had early on with Scottrade, and then followed about a year later by E-Trade, who took components of our technology and put it into their platform and gave it to their customers, as part of their service for free. And we worked out enterprise licenses to do that. And that sustained us until, those are ongoing relationships.
Great accounts to get right off the bat.
Exactly.
Really very fortunate, instead of, having to get, 100 retail subscriptions, you guys found gatekeepers.
That's right. And that's it. You've nailed it on the head. I mean, and early on, I made a decision that even to go and open up the yellow pages at that time, or even the phone book on the internet, and to look up everyone who had the word capital fund in their names in New York and go calling on them, and if you gave the pitch and you went through the pilot, and all you could get was maybe 3 or 4 licenses, at a time in these rather kind of small offices. And even the large ones like Merrill Lynch and so forth, their trading operations weren't as large as the name might suggest, but everybody wants that name on their website to call a partner. And I saw too many firms who were burned out and, carcasses on the highway, in the market from making these kinds of decisions. And I decided that although it was exposure more to a retail group of self-directed investors and traders, it was a way to reach one decision maker who could affect the technology decisions for tens of thousands of people. And so I kind of just stepped up to the plate, and we were able to show Scottrade the value of seeing curated trade ideas, what that did on people's decisions, and how that affected their trading behavior.
Would you characterize most of your stuff as being swing, intermediate term trading, or 2 to 3 day guerrilla warfare type trades, position trades, or do you offer all different TFs, time frames?
I'd say it's everything from below that, everything from 2 to 3 days down to intraday.
Okay.
If you come to trade-ideas.com and you give us your email, we give you a trade of the week, and it comes out and it's published every Monday. And those trades of the week are actually our first foray into much longer term positions. The trade of the week is specifically designed, it's sourced from our artificial intelligence, and it will provide an opportunity with a game plan that can last weeks or months, depending on the position management you apply. I mean, we tell you, this is when the trade is live, this is the stop loss if the trade fails, and at this profit target, start to make decisions about either adding or harvesting. But we've picked some amazing, stocks, and I'll show you your question was about performance, and so I just got to finish the evolution of the product. We started as a scanning tool. We added a backtesting component. And then in the last 4 years, we realized that we needed to do a better job of showing people how to use the tool. Rather than just providing a scanning and a backtesting capability, we needed to do the job of actually showing examples, backtested examples of things that were working in the market, simply because our own customers using the technology weren't able to, except for a small few who could configure the scanning technology themselves and then run the backtesting themselves, they weren't finding great results. And that's a lot of stick to put in front of someone before you give them a carrot. So we followed a strategy that said, we've got to show the maximum value of this technology on the first impression. On the first impression, you've got to understand how this tool can make you money. And to do that, we decided to create the algorithms and strategies that were working. But to scale that, we needed the artificial intelligence to crunch all this data on its own, and now that's exactly what it does. And I'll step into this in a moment, show you what the AI looks like as we move away from the free market as soon as the market opens. But all that to say is that this evolution has taken us from scanning to this now kind of machine learning artificial intelligence that's able to create the actual what's working in the market. What is this tool, and what does Trade Ideas predominantly look at? It looks at U.S. Equities and equity derivatives, so ETFs, indices. We do look at options data, but we look at options volume data more than specific contracts and price.
Okay, so volume, I know, the Nigerians always talk about volume in options trading. Do you believe that volume in options trading gives you a heads up as to directional trades in the market?
Absolutely. I think these guys are great, and that's like it's just like tracking a deer in the snow.
Right.
I mean, it's the footprints that point that at least give you the.
You guys don't have ponytails and goatees, though, do you?
No. I would say our culture
just
is.
Checking, David. Just checking.
We're a nice mix. Our culture is definitely SoCal, Southern California.
All right.
And
but you're in Atlanta, aren't you?
I'm in Atlanta, and I'm the one who wears the suits, and I will get to Chicago and New York as to wine and dine and enjoy a nice steak and a big fat red.
Boy, that sounds good. All right, so sorry I interrupted you with that, but okay, so you follow the option volume, and
right.
And for your algo, did you have to go to outside people to plug in all your stuff and develop the algo, or did you do it in-house?
Yes. So that's a great segue, Dale. And so this chart that I'm showing right here is kind of like the bird's eye view of how we develop the algorithms and what's happening with the data you're about to see. Starting from the left-hand side, we take a variety of data feeds, and the more diversity in the feeds, the better our algorithms and our results are. By that I mean we're taking the time and sales from the actual exchanges. That's the basis of our technical analysis that we develop.
Okay.
And then we take data from other sources and vendors that provide us with fundamental data like earnings and
PEs.
Exactly, EPS and so forth.
Okay. All right.
And then we're also adding, that's kind of typically structured data. And then we add non-structured data, which is like the news and social media. And that we feed into our back office. So we look at, as I said, we look at social media, we look at news, we look at fundamentals, and we look at technicals. And then we derive new data points from all of that. So we take interesting looks at some of the technical analysis, for instance, and we'll say, well, what's the performance since January 1? We take derived data points from social media, and we'll say, well, Apple's mentioned so many times on average a day, but is today's performance being mentioned, is today's Apple social media activity more than usual or less than usual? And that's extra data that we're deriving from what we get.
All that. What do you glean from that? Because if you were monitoring Bitcoin, you would have had a mushroom cloud of tweets in the last 60, 90 days. So when it's becoming more prolific on Twitter, is it a bit of a contrarian signal or a confirmation signal for your work?
Those are the kind of questions that the algorithm actually, builds
it answers
on.
It for you, huh?
Yeah. So, even my own answer right now is dated, and that it's,
Could I interview the algo next time?
There you go. Her name's Holly.
I'm just kidding you, buddy. So, okay, so you're plugging this stuff in, and so you have, it looks like what? How many different sources before you get to a conclusion?
Right. So the system has about 60 strategies, and some of them are ones that we create. We call them base strategies. And a base strategy might be, how is a stock reaching a 52-week high, performing in this market with earnings reported 3 days ago. And so it'll take that base strategy and say, well, it looks like stocks with earnings 3 days ago that are at a 52-week high are actually perform even better or have a more profitable result if it has more than usual social media mention. Whatever it is, it'll add whatever indicator that we have in our inventory, and if it improves the result as it backtests it overnight, it will keep that indicator. If it's an indicator that degrades the performance, it gets rid of it and it goes on to the next, and it goes through about 120 indicators for each of these base strategies. And it eventually optimizes and changes whatever it needs to in order to say that over the last backtesting period and up to and including yesterday, this is the best way to trade this strategy. So it does all this scenario backtesting. We call it the quantitative combine. And it will take the trading plan, the best way to trade it. Perhaps it's to hold it for 3 days. Perhaps it's to hold it for 3 hours. And it will determine exactly the best way to trade this strategy that it's found. And it combines all those. And then it does a final criteria that windows, and the criteria is a 12-point criteria. It's got to do with trading activity. It has to do with lots of different variables, and it eventually will pick about 7 or 8, or sometimes 5, and it will say there can be long or short strategies, and they'll be the ones that the system will publish for the day. Right. And then we allow our customers to either add their own preferences on top of that. They can do a custom kind of portfolio, and they can actually even auto trade from the trades that Holly, our AI system, produces, and then that's how we capture alpha. Let me go back first. I'll show you the performance in a moment, but let me go back and show you. Here's the AI channel. I'm going to click on this. The screen's going to change, and I'm going to show you what the strategies are for today that Holly has prepared. And can you see how
it's a she, huh?
Yeah, we call her Holly because an early customer of beta back in 2015 was evaluating the software, and I think he said something like, "Look, if this actually works, it's going to be a holy grail." And we thought, well,
I got it.
We're not going to call it.
Because the Old Testament gives wisdom a feminine attribute. She is wisdom. So anyway, start listening to your wife.
Exactly.
Besides Holly, who do you listen to more, Holly or your wife? I'm kidding, buddy.
I listen to women. I listen to women. I listen to my daughters.
There you go. All right. So now we're looking at some things that Holly spit out today, and I see the spider up here.
That's right. So this is our AI channel, and today Holly's looking at let's see, what is this? Five long strategies and 2 shorts. So let me take a step back. Up at the top, we always show kind of 3 charts in this particular layout. We show a 5-minute chart, a daily, and then always on the right-hand side here, this last chart is always a 15-minute chart of the S&P or the SPY. Right? Okay. So, as I said, it's quiet. It's the pre-market, and usually even after the market opens, Holly sometimes waits as much as 15 to 20 minutes before making a trade. But this is the lens through which Holly looks at the market, the way our AI looks at the market. It's only going to look and consider the market if any particular stock meets the criteria of any of these strategies, either long or short. And then here are the time stops, short of, if it doesn't reach its profit target or stop loss, this is the time in trade it will be in. Some are 60 minutes, some are 30 minutes. Then it has a profit target for each idea, and it also tells you this is how it's going to calculate the stop loss. A smart stop is simply, it's more AI that looks at the specific volatility of each stock, and then it will add a risk amount to that in order to determine what it is. And if it reaches that threshold, it tells you. It says, this is the reason why I'm exiting the trade from a smart stop that's been hit. And then this is kind of like the performance board, or the P. Over here on the far left is the P&L that will show in real time, and on the bottom it'll show on the bottom left here are the trades that are closed, and any trades that it opens will first appear on the bottom right.
Very nice technology. Very nice.
So yeah, so maybe we'll have a chance when the market opens, maybe something will fire across here. But the rest of these channels offer you a kind of Netflix view of the market. So here we have a channel that's called Swing Trade or Swing Ideas. But when you click on these different channels, you're presented with a theme, a motif, a view of the market based on that channel. So we have a volume channel, we've got an options channel, we have a social media channel. Right now we're looking at the Swing Ideas channel. And again, if it's grayed out, it just means it's still the morning in the market.
Yeah, nothing yet.
Nothing quite yet. So that's why we were looking at the pre-market before.
Okay.
Let's go back to that pre-market. Okay, and let me actually go back to show you a little bit of performance. So again, what we're doing at Trade Ideas is we have this triad where we look at, we talked about, you mentioned it before, the importance of a trading room and support. And everyone who signs up for Trade Ideas gets a one-on-one hour of power training scheduled. And sometimes it takes, with our backlog, about 2 or 3 weeks, but that provides enough time to make sure you're using the technology on your own, kind of exploring, and then your questions get a little bit sharper if you spend time. And by the time that you have our hour of power training, you're a little bit more well-versed on how to use the technology, thanks to the videos that we have, the webinars that we put on each week, and the trading room that you can always access to learn how other people are using the technology. So the support and service, the actual technology itself, and then the content that we're creating from it is how we deliver our value. This, I'll kind of briefly go over, who are our competitors, who are we competing against? There are people that are doing similar things, but in a different way. I think we're the only AI as a service provider where on a subscription basis, you can sign up and get access to these algorithms to use in your own trading environment. Whereas a lot of other firms that we compete against have the algorithms, have the teams developing them, and the AI, but you have to participate in their fund if you're going to use it. Behind the fund wall. And one of our competitors that we look at, and that's making, you know, one of the larger ones is BlackRock. This quote was pretty interesting from Larry Fink, who's the CEO there. Right. And these guys, by the way, they lost $500 million over the last 2 months and the first month of 2017, or the first, I think it was the last quarter of 2016.
Well, they take the other side of Icon's trades.
They took the other side of your trade and Holly's trades.
Okay. Thought it might have been Carol Icon, you know.
Oh yeah.
Yeah. Okay. So all right. So there's an endorsement by Lawrence Fink. Why do you think it didn't work for them?
Well, you know, I think a couple things. One, I don't purport, or I don't, you know, assume that we are moving the same amount of money as they are. So that's a whole different dimension of complexity. But you know, this is hard work. The ability to, in order to have a functioning machine learning AI, you have to have, as a core competence, the ability to crunch a lot of data, big data. It's a big data exercise. And we do it well, and we've done it with our own data that we have, you know, as I said, we derive our own data points from the data that everyone else gets, but how we're using that data, we have developed over 14 years. I have no doubt that these guys will get it right, and get it right a lot sooner than us, but they're not, so far they're not there yet from these reports, and and they're not doing it the way that we do it, which is to make this available to anybody on a subscription basis. These guys are, you've got to invest in their fund.
Okay, so that's a good segue to, okay, there's your equity curve.
Well, this is just a quick performance of trade ideas. So for years, we started in 2003, as I mentioned. We had some nice revenues, but we kind of plateaued for several years as we kind of figured out what to do with our technology and how to make it more engaging. And we even started to kind of like drift down a bit until we followed the strategy I mentioned of making sure that we put the best impression, the maximum impression, the maximum value on that first impression. And that just got us into, like, we need to do the job of creating the strategies ourselves. And then we added the AI and big data, and we have soared ever since. Yeah,
you're parabolic now. Does that make you nervous?
Not too much. We just keep adding.
Don't you need to consolidate these gains a little bit here?
You know, right now, when it's what do you say? You make hay while the sun shines, and you just you get out there every day, and it's a great environment because we were just awarded. We just made the Inc. 5000 list for the first time.
Nice. Congratulations.
Thanks. And we've been collecting a little bit of more awards and recognition. But let me talk a little bit more about performance, right? So let me stop here for a second. If you, as I mentioned before, if you come to Trade Ideas, you give us your email, we give you a trade of the week. And so this is a bit of an eye chart, but this is the performance year to date of these trades of the week that we put out since the beginning of January and ending June 30th, ending Q2. So you can see these performances, the losses are kept low because we have a stop loss in place, and you know, if it reaches it, we're out of the trade. And others, like Weight Watchers, is just that's obviously a killer, you know, call that we made, and that's still producing. But I play these as well. I mean, Chug was a good one. It's continued to do well since the end of June. CHGG. Here's Crocs, CROX. This week's trade of the week was QID, which is the S&P
ETF.
Exactly, the inverse.
Right.
Which I thought was a little telling.
Right. So you can use some of these things for broader market, subjectively for yourself, broad market expectations. If you saw Trade Ideas spitting out some bearish ETFs, even if you didn't trade those, it would give you a bias for which way the market might go.
That's right, and I'll even give your listeners and you a even deeper dive, or just another indicator, if you will. So I thought it was interesting that we produced this, you know, QID as our trade of the week. And last week, I think it was Thursday or Friday, Thursday, I think it was, the AI system did not make a single trade the entire day. And the only other, actually, it's done that on a couple of occasions in the past. The last time that it made no trades on a trading day was the Friday after Brexit.
Okay.
And so, you know, it's not a, I don't think it's a forecasting indicator, but it is interesting that when it makes no trades, it is going in, it's in a mode that says whatever the market is doing today is not something I've prepared for. So rather than, you know, it's always under a mantra of do no harm as it looks to see opportunities. And if it doesn't see one, it does not trade. So it won't ever force anything. And then you know, if there is something that happens and it stops trading in order to do no harm, the unique ability of the AI is that it will re-engage in the market often at times where people are either too anxious to go back in or worried about where does this end. You know, it doesn't have those kinds of emotions, and it will go in and often do, well, Brexit is a perfect example. When people were nervous and anxious the next Monday after the news broke, that's when Holly started trading again and really started to separate ourselves that year from you know, the benchmark indices.
Okay,
what's
David,
your
wow, what a tremendous tool. What's the best way besides your Twitter handle for people? Do you offer a trial or anything like that?
Yeah, you can use a demo version of our technology. It's 20 minutes delayed. It will give you the kind of menus, and it will show you how the tool can function. The best way to kind of start a relationship with us is come to the website of trade-ideas.com and sign up for the trade of the week, and just get a sense of the data that we're providing. Attend a webinar or come to the traders room, and that will certainly get you quickly into, you know, the community that of other people using the tool and what they're doing with it during the market. You know, moderated by Barry. That's just I can't say that there's a better way to experience the technology than going into the traders room.
Okay. Well, David, I want to thank you so much for presenting your cutting edge product, and you know, you're in the AI world now and very nice results, and you represent your company quite well. You know, excellent spokesperson, and besides it being a great interview and an option for people to consider, I hope that we've made you a nice commercial.
Thank you, Dale. It's been a pleasure talking to you. It's been a pleasure, and I hope to meet you and to do this again in the future.
All right, my trading warrior brother. Thank you, David, very much, and good hunting. Sounds like you guys are definitely home free with what you have going now, and congratulations on your awards and breakthroughs, and most of all, David, your stick-to-itiveness is something that Jake Bernstein said. You guys have been at it for 14 years. Glad to see you reaping the harvest, buddy. Congratulations.
Thank you so much. Appreciate it, Dale. Have a great day and happy.
All right. Okay. Thank you so much. And that's my trading warrior brother, David. I probably butchered your last name. How do you pronounce it again?
Affariate, like chariot. Affariate.
Okay, David Affariate. And before everyone does leave, we're going to wrap it up tomorrow. But I think that even David would agree, although in stocks, you know, if you're going to use leverage, you're not going to get the kind of leverage that you get in futures or FX. But it's my philosophy, the biggest mistake people make is using too much leverage. So I'm going to wrap it with use less leverage. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. And most of all, guys, don't just count your pips, count your blessings. Thank you for your attendance today. Thank you, investing.com, for hanging out with us in face. And we'll see everyone tomorrow to wrap up the week and see what Janet has to say. Maybe Janet says, well, the Janet does not. It's not much here before we can do anything. And maybe Mario will say, oh, about the economy, I'm not sure it's really coming out of the hole yet. I might do a little bit more QE. So see everyone tomorrow. Adios. Enjoy your summer day. It's drawing to a close. And Steve, you got back from vacation already. Adios.